When it comes to the stock market, investors are constantly searching for opportunities that could deliver substantial returns. In the fast-paced world of trading, some stocks seem poised for a meteoric rise, capturing the attention of both novice traders and seasoned veterans alike. Today, we delve into three of the most iconic and heavily watched companies on the market: Aapl, Aapl, NIO, and Nike NKE. Each of these giants hails from a different sector: technology, electric vehicles, and sports apparel, but all of them have demonstrated significant growth potential and have generated immense market interest. We'll examine where these companies stand today and evaluate which of these stocks could be about to blow in the near future. Aapl, the unstoppable tech giant. A legacy of innovation. Aapl is perhaps the most well-known company in the world. From its inception, Aapl has consistently revolutionized industries with groundbreaking products like the iPhone, MacBook, and iPad, cementing its place as a leader in the technology sector. Over the years, Aapl has transitioned from being just a hardware company to a diversified technology powerhouse with strong revenue from services, including iCloud, Apple Music, and the App Store. Financial strength and market dominance. One of Apple's most appealing aspects for investors is its rock-solid financial position. With a market capitalization exceeding $2.7 trillion, Aapl is the most valuable company on the planet. It boasts a consistent track record of profitability, robust free cash flow, and a loyal customer base. Apple's revenues have been fueled by steady iPhone sales, with the company selling more than 200 million iPhones annually, in addition to strong demand for wearables like the Apple Watch and AirPods. Aapl has been riding a wave of success with its services division, which has grown into a major profit center. This division includes the App Store, Apple Music, Apple TV Plus, and iCloud services, all of which generate high-margin, recurring revenue streams. The company's services arm is expected to continue growing as more consumers become entrenched in the Apple ecosystem. Growth catalysts. While Aapl has already cemented itself as a tech titan, it's not content to rest on its laurels. The company is reportedly working on ambitious projects such as an electric vehicle, Apple Car, augmented reality, AR, devices, and enhancements to its wearables lineup. These initiatives are crucial for Aapl to maintain its growth trajectory in the future. Additionally, the release of the 5G-enabled iPhones has given Aapl another boost, especially as 5G networks expand globally. The rapid adoption of 5G smartphones will likely lead to an upgrade cycle that could spur further iPhone sales in the coming years. The company's continued innovation, combined with its financial muscle, makes Aapl stock a long-term favorite among many investors. However, the stock's substantial size also makes it harder for Aapl to deliver massive percentage gains as it once did in its earlier years. Risks. One risk that Aapl faces is its dependence on iPhone sales, which still account for a large portion of its revenue. If iPhone sales were to slow down or if competitors like Samsung and Google gained ground, Aapl could face headwinds. Additionally, regulatory scrutiny over Apple's App Store practices and potential antitrust issues could pose future challenges. Overall, Aapl stock is unlikely to deliver the explosive growth seen in smaller tech companies, but its strong fundamentals make it a relatively safe bet for long-term investors. NIO, the electric vehicle disruptor. The EV revolution. NIO, often dubbed the Tesla of China, has emerged as one of the most promising players in the rapidly growing electric vehicle (EV) market. Founded in 2014, the Shanghai-based automaker has quickly gained recognition for its sleek, high-performance electric cars and innovative battery technologies. NIO's rise has coincided with the broader shift towards clean energy and sustainable transportation, which has catapulted EV makers like Tesla, Rivian, and Lucid Motors into the spotlight. China's booming EV market. China is the world's largest EV market, and NIO is well-positioned to capitalize on this explosive growth. The Chinese government has been aggressively promoting the adoption of electric vehicles through subsidies, tax incentives, and stringent emissions regulations. These policies have created a fertile environment for NIO and other EV makers to thrive. In terms of product lineup, NIO offers several models, including the ES6, ES8, and EC6, all of which have garnered positive reviews for their design, performance, and range. The company has also differentiated itself through its battery-as-a-service (BaaS) model, allowing customers to subscribe to battery upgrades rather than purchasing them outright. This service not only reduces the upfront cost of NIO vehicles but also allows for easy battery swaps, addressing one of the major pain points in EV adoption: charging time. Growth trajectory. NIO has experienced rapid growth in vehicle deliveries, consistently increasing its sales quarter after quarter. In 2021, NIO delivered more than 90,000 vehicles, a significant increase from the previous year, and it continues to expand its production capacity. As the company ramps up manufacturing and expands its lineup to include more affordable models, analysts predict that NIO's market share could increase substantially in the coming years. Another growth catalyst for NIO is its international expansion. The company has already started selling vehicles in Norway and plans to enter other European markets, including Germany and the Netherlands. This global push will be essential for NIO to compete with other EV giants and establish itself as a global brand. Risks. Despite its potential, NIO faces several risks that could hinder its growth. The EV industry is highly competitive, with many well-established players like Tesla and emerging startups vying for market share. Additionally, NIO's reliance on the Chinese market exposes it to geopolitical risks and regulatory changes. NIO stock is also known for its volatility. Like many growth stocks, NIO's shares have seen dramatic swings in value, making it a riskier investment compared to more established companies like Apple and Nike. While NIO's long-term prospects are promising, investors should be prepared for short-term fluctuations. Nike NKE, the sportswear king. A global powerhouse, Nike is a name synonymous with athletic apparel and footwear. Founded in 1964, Nike has grown into the world's largest sportswear company, with a market cap of nearly $200 billion. Its iconic swoosh logo is instantly recognizable, and its products are worn by everyone from professional athletes to casual gym-goers. Nike's success is built on its ability to innovate and stay ahead of consumer trends. The company is constantly releasing new sneaker designs, collaborating with high-profile athletes, and tapping into the cultural zeitgeist with limited edition drops and influencer partnerships. Digital transformation and direct-to-consumer. One of Nike's biggest strengths in recent years has been its digital transformation. The company has invested heavily in its direct-to-consumer (DTC) business, focusing on online sales through its website and mobile apps. This shift has not only helped Nike increase its profit margins by cutting out middlemen but has also allowed the company to gather valuable consumer data to inform future product development. Nike's digital sales have surged, particularly during the COVID-19 pandemic when many consumers turned to online shopping. Even as physical retail stores reopen, Nike's digital segment continues to grow, representing a significant portion of its total revenue. The company has also launched various loyalty programs, including Nike Membership, which helps drive repeat purchases and brand loyalty. Global brand power. Nike's global reach is unparalleled. The company has a strong presence in North America, Europe, and Asia, with China being one of its fastest-growing markets. Nike's international expansion has been a key driver of its revenue growth, and the company shows no signs of slowing down in its pursuit of global dominance. The company's partnerships with high-profile athletes such as LeBron James, Serena Williams, and Cristiano Ronaldo have further bolstered its brand, keeping Nike at the forefront of sports culture. Additionally, Nike's collaborations with designers like Virgil Abloh and brands such as Off-White and Supreme have made it a staple in the streetwear and fashion worlds, broadening its appeal beyond just sports enthusiasts. Challenges. Despite its strengths, Nike is not without challenges. The company faces intense competition from rivals such as Adidas, Under Armour, and Puma. Additionally, supply chain disruptions, particularly in Asia where much of Nike's manufacturing takes place, have affected production and inventory levels. Nike also faces scrutiny over labor practices in its factories, an issue that has resurfaced in recent years. The company has made efforts to improve transparency and ethical standards in its supply chain, but this remains an area of concern for some investors. Long-term outlook. Nike stock has been a solid performer over the years, and its strong brand, global reach, and digital strategy position it well for future growth. While it may not offer the explosive growth potential of NIO, Nike provides a more stable investment opportunity with a proven track record of success. Conclusion. Which stock is about to blow? All three stocks, Apple, NIO, and Nike, are leaders in their respective industries, but each comes with its own set of opportunities and risks. Apple is a tech behemoth with a diversified revenue stream and a strong balance sheet. While its size makes massive growth more difficult, its continued innovation and 5G cycle provide long-term growth potential. NIO is a high-risk, high-reward play in the fast-growing EV sector. If NIO can continue scaling production, expanding internationally, and maintaining its technological edge, it could deliver significant returns. However, its volatility makes it more suitable for risk-tolerant investors. Nike offers a blend of growth and stability. Its dominance in the sportswear market, coupled with its digital transformation, positions it for steady growth. For those looking for a balance between growth potential and lower risk, Nike may be the ideal choice. Ultimately, the stock about to blow depends on your investment goals and risk tolerance. If you're looking for stability with some growth potential, Nike might be the best option. For tech enthusiasts, Apple remains a solid, long-term bet. However, if you're willing to embrace risk in pursuit of higher returns, NIO could be the stock to watch.